You're listening to Built to Convert, the podcast where growth-minded marketers, founders, and creators come to level up. No hype, no guesswork, just bold insights that drive results. Let's go.
Welcome to Built to Convert, the podcast where we explore how strategy, analytics, and creativity come together to drive meaningful growth. I'm your host, Tyler Lane, founder of Session Interactive. Today, we are continuing our credit union series with a conversation focused on a real challenge facing financial institutions right now. When products look the same, rates are competitive everywhere, and fintech competition keeps increasing, how do you build preference, loyalty, and measurable growth? To unpack that, I'm joined by Michael Murdoch, AVP of Marketing at University Credit Union in Los Angeles. This episode is brought to you by Session Interactive, the performance marketing agency for financial institutions serious about growth. We partner with credit unions, banks, and financial brands to strengthen SEO, paid media analytics, and conversion strategy, so marketing performance ties directly to funded accounts, qualified members, and long-term value. If your team needs sharper data, stronger acquisition strategy, or clearer attribution in an increasingly competitive landscape, visit sessioninteractive.com. All right, today, guys, Michael Murdoch is the AVP of Marketing at University Credit Union, one of the leading credit unions in serving Southern California. In his role, he oversees brand, acquisition strategy, and the evolution of UCU's marketing approach, an environment where rates and financial products are often create functional parity across institutions. Today, we're going to explore how mission-driven credit union competes in a commoditized marketplace, how acquisition is measured beyond vanity metrics, and what really means to evolve from a transactional institution into a lifestyle-oriented brand without losing commercial discipline. Michael, great to have you on. Appreciate your time.
Thank you very much, Tyler. I'm looking forward to chatting with you.
Yeah, absolutely. So I mentioned before we hit record here, I kind of like to establish a little bit of expanded credibility. You've been in the space for quite some time now. What led you into financial services, in particular marketing, and then specifically in the credit union space? What was the initial area or opportunity that gravitated towards you?
I love this question because it's always, I wanted to be a firefighter when I grew up. And then 20 years later, I had no idea that I would be this immersed in the credit union ecosystem. I just did not think it would happen. So this is during the unsettling times of 2008. I was already in marketing, but not in the finance scope or space. And I was let go, which at the time I was young enough to think, oh, this is the end of the world. I'll never get another job. I'm going to work at a gas station tomorrow. I've been a credit union member my whole life. I couldn't tell you what the difference was way back then. I thought they were the same thing, but I knew there was something special. And I saw a credit union was hiring in the Portland, Oregon area. I thought, why not? I'll throw my hat in the ring. I don't know what I'm doing, but I know marketing. And before I knew it, I was hired. It didn't take long, Tyler, before I started noticing things like financial education, the way that members were treated and spoken of differently. As I've been there longer, I know that some of that stuff is old hat and it needs refreshing and it gets fatigue. But back then, that's when I, so to speak, drank the Kool-Aid. From there, it was a wildfire, and I haven't left or looked back in almost 15 years now. But I've always been in the marketing space, but I'm a huge credit union advocate. I grew well outside my role, and I don't seem to want to stop anytime soon.
We talked about that too, just that phrase that you brought up, drink the Kool-Aid. I feel like sometimes it's unmatched passion that we see.
Right.
Me personally, I've worked in a variety of industries over the years, and we're lucky enough to get involved with credit unions. And it's like, wow, they are seriously passionate about what they do. Let's unpack marketing as a whole, and fairly general question here, but like, what does good marketing? What's your perspective of good marketing looks like as your career evolved? You mentioned you knew marketing right when you first applied to the credit union gig. How has that evolved in your definition of that over the years?
Yeah, for a while it was empathy. If I can narrow it down to one word. But then I realized that even that didn't work, because how am I going to empathize with somebody if I've never actually been in their shoes? I can sympathize, but I can't empathize. So then that changed. Then it kind of regressed to, well, not regress. I took a step back and I said, it's all about brand personality. How can somebody relate to my brand personality? And now today, it's all about storytelling. And so there's an excellent guy out there named Andy Janning, who is doing a big project on storytelling and how credit unions can better tell that story. Because if we're telling a story and somebody is saying, "Wait, what? Can you repeat that?" Or I totally relate to that, or if they lift an eyebrow, they're more likely to go back and revisit what you said or what you shared. And this isn't leading product first. It's leading personality first and empathy and sympathy first. So that's why I wanted to put a bow kind of on storytelling. And that's how I define it now.
Yeah, I love that. And I think that's often, it's just it's a missed maybe opportunity in the sense to just, I think you mentioned too, it's like you didn't know the difference between banks and credit unions, right? That's all too common, right? And
my mom still says, "How's the bank going?" It's like, Mom,
Mom,
come on.
How dare you, Mom? Stop. Yeah. And it is those aspects and other key differentiators, not necessarily always about banks, but are hopefully defined within a proper story.
Absolutely.
Yeah. What would you say is different about leading marketing in a credit union versus other industries? I know it's been a while since you've been in other industries, but what would you say? I think storytelling obviously is a unique component, but are there other key components that you can kind of hone in on that you would say are different?
I'm sure there are so many that I could think of that I have in my back pocket that are not coming to mind, but immediately it's knowing or being more involved with your consumer, your member. I don't even want to say I don't want to say your member, even it's the people and the economies that you're serving in a way. There's nothing better than to look at your impact report or to create an impact report or go to the GAC and speak with your legislators and just see how much as a credit union you've put back into the economy, the education systems, our streets and roads. There are just so many differences when it comes to actually serving people. Whereas in some other industries, it becomes kind of homogenized, or it becomes very white label, if you will. It's we know how to serve, and this is how it's going to be. It's red and yellow for fast food, and for big banks, we're paying our stockholders back in New York or wherever. So I definitely think it's the relationship. Something that's more tangible anyway. It's the relationships that I've developed between myself and the people that we serve. I think that's a huge difference that I just didn't feel in my prior life, if you will. And I don't know if that's for everybody, but that's definitely something that resonates with me as far as the differentiator.
Sure. Yeah. I mean, I'm hearing that across the board too with other credit unions that we've been involved with and other executives in the marketing space. So yeah, I think you're spot on, and that's your story too. Let's switch gears here a little bit. I always often think, selfishly, I'm like my position, right, around how I engage financial institutions, and when rates and core products are maybe fairly similar for your competition, what would you say that differentiate? How do you differentiate yourself? But what aspects of those drive acquisition so you can correctly differentiate to subsequently drive acquisition?
I really like this question because financial products are functionally similar. I mean, differentiation rarely lives in the product.
Exactly.
In what we serve. I mean, it's hard to make it different than what it was 10 years ago. It really lives in the meaning wrapped around the product. So I would say that when you look at, and I'm just throwing out some arbitrary examples, but these are our most common ones, I'm sure for everybody, but checking accounts, auto loans, certificates, there's so very little structural differentiation left that consumers can rate shop in seconds. So if you're competing purely on product features, you're competing in a race to the bottom, for lack of a better way of saying it. So I like to break it up into three pieces. There's emotional safety. Like people choose institutions they feel understand them, right? Both financially and culturally. Then there's identity alignment. So members are increasingly wanting their financial institution to reflect their values. Community investment, whatever that might be. We have to know what that is. And then experience memory, really. So the moments that matter the most are often non-transactional. I hear those stories are my favorite when somebody says, I bought my first car here, and we say, oh, that's awesome. And you look and it's 1964 And you're like, your first car, I hear what you're saying.
Yeah,
They
yeah.
remember that,
Oh,
they remember that. I don't remember that because I wasn't born yet. But the fact that he says that, I will always remember that now. So the fact that he's always remembered that, that's where the differentiation really falls into play. So wasn't really an answer for you,
no,
but
cool. Yeah. And I think it's tough, right? I think
I'll be the first to admit they're sometimes so similar. It's like, what are we doing? Well, let's change the name. Boom. Okay.
right.
Like that's
yeah.
yeah. And you get into those. So
no, absolutely. Let's talk about brand messaging a little bit. Where have you seen that work in terms of meaningfully influencing people to switch behaviors about how they feel about a brand or how they feel about a credit union, how they feel about products? I mean, you mentioned product naming in particular. So it becomes more intuitive or more explicitly relevant to what they're going through.
yeah. And I think what you're talking about is that transactional institution to more of a lifestyle brand.
Exactly.
So
yeah.
The shift from financial institution to lifestyle brand is really a shift from, I guess, episodic interaction to continuous relevance. So historically, throughout credit union time from way back in Germany, it's been, open an account, get that loan, and then we want you to move on and get another loan, get a credit card, that's episodic banking. But a lifestyle brand, I think, shows up in between those transactions, digitally, socially or educationally. And then internally, that shift kind of changes everything. So marketing campaigns really stop and become ecosystem driven. So you're building always on content, the financial education platforms, the community engagement strategies. I think operationally, mission has to be activated, not just stated. I mean, everybody's mission statement has something about financial well-being. That's great. How are we living it? How is it showing up in the designs that we're putting out there in our products and services? Because from there, your success metrics will evolve. And the goal isn't just transactions. It's really financial relevance across your members' life stages.
Yeah. So I love what you put around the ecosystem piece, because you could think about it, or individuals are like rate shopping and it's very transactional.
Yeah, exactly.
But you want to obviously get that person, a great rate, but make them a lifetime member. And
right. If we all had the best rates, we'd be shopping at two places and that'd be it,
Exactly. Yeah. And that episodic piece you mentioned, it kind of reminds me, with no shade here, but the Wells Fargo model of years past, right? You get a new account, you get a new account.
Everybody gets one, even if you don't know it or want it.
Exactly. What misconceptions do marketers have about what truly drives member preference? Michael, what would you say misconceptions wise as it relates to credit unions?
I think we often bring in our own personal experiences as consumers, and both good and bad. Frankly, there are probably a few things that I've said here today that I'm not practicing as well as I'd like to be in the shop. And then other times I bring terrible ideas because I go, this was my experience with this credit union, and how can we change that? And it's kind of like, wait a minute, are we doing that? What? And it's not, if it isn't broke, don't fix it. It's more like, I think sometimes as marketers, we can lose our sense of our own mission, because of our personal mission. So that's something that I try to be careful and cognizant of. But I do definitely see that in other brands, especially as I've gotten more involved in the systems marketing and business development program at America's Credit Unions, used to be CUNA, is a lot of folks, we will tell the same stories. It's like, I sometimes am writing myself into my marketing narrative, and it's because I've got the best opinions. I know the best colors. I know the best. So I do think that stepping a couple steps back and saying, okay, who are we marketing to? Storytelling has been a huge reprieve when it comes to that kind of rub for me anyway. So I would say that that's my personal biggest one.
I think that it's such an excellent point, just in the sense that you're absolutely right. You're a sample size of one, right?
Yeah.
You're
Oh, yeah.
representing thousands, hundreds of thousands, millions of potential individuals attending and interacting with your credit union. So, and I think that's just, for me and my viewpoint on what it's just, that's experience led, and your viewpoint, and you've self-educated and you've matured, right, to identify that, listen, that's not, I've got my own opinions, but
I've somewhat matured. I don't know if
let's be very clear. Let's talk back to, again, well, this is interesting redirection of the question, but again, if people are just rate shopping versus open to a broader relationship, what signals are you, from engagement related signals and metrics, what are you looking to understand about those individuals? I know you're looking to kind of nurture those individuals on an ongoing basis. What would you say there?
Yeah, that's another good question, because people don't wake up wanting a new financial institution. It's rarely that you're getting those acquisition numbers because your brand is prettier and all of a sudden they say, oh, yay, I'm going to switch to them. They look good. They wake up needing a convenience or even a yield. So strategically, we're acknowledging that a large percentage of acquisition is situational, not relational. This has been in the industry chattered about for years, at least as long as I've been here. But we really look at things like, have they moved? Are they financing something? Are they chasing yield? Have they had a service failure elsewhere? Sometimes you have to adopt a new vendor to really dig into some of these numbers and understand them correctly, but they're a little off key when it comes to your more standard analytics that you're looking at. And we have dug deep into analytics in this last couple months. We've got an amazing digital manager on our team, and we're starting to look at a lot of these metrics and saying, how can we realistically apply them and accurately? Because rate shoppers behave differently, right? They engage late funnel, they compare products, not brands, and they convert quickly, and then they churn easily. So the other one I like to look at are what I call cheaters. And these are members that you're starting to see are making payments with Wells Fargo more and more and more, or they're making payments, or they're slowly withdrawing money over time. I think these are the maybe mid-hanging fruit that I think they fly under the radar and really easily. And what do they care if one day they become a dormant account? Make them care. They're not going to care. Yeah. And so we like to not quite look outside the box, but look into the corners of the box when it comes to metrics and things that we can look at to strengthen acquisition and then maintain it.
Michael, that's powerful stuff. I mean, I think just it's funny, just customer service, right?
Yeah. Oh, that's a huge one.
With the data too. But you got all these data, and I love that, just that positioning of like someone slowly, they're maybe not maintaining their average balance, so to speak. Is that an indication that they're going to shop elsewhere? Yeah. Are they not happy? Are they not? When's the last touch point that they experience with your credit union? So yeah, those are really cool.
Maybe nothing's going on,
yeah,
and you check in with them and it's all of a sudden, oh, wow, and they're re-engaged. But maybe it's something more serious. I'd never forget a story I learned quite a while ago it was at a session at Go West, which was then Northwest Credit Union Association, about an elderly member who passed. And because she had an auto loan, it was her PFI, but she'd had an auto loan from a long time ago at Wells Fargo and had paid it off. They sent her family flowers. Wells Fargo was on top of it, sent her flowers. They closed the credit union account, went over to Wells Fargo, took out all of her funds and went over there just because they were paying attention to the relationship and the behavior. And they noticed, oh, this customer had passed. Mm-hmm. Little things like that. If you're paying attention to those metrics, those lifestyle metrics, not to call death lifestyle, but it's part of life, you can be ahead of it in the way of helping people tell their story, or at least be supportive of where their story is going next. So interesting metrics to sort of dial in, but it has helped us understand behavior so much more.
Yeah. And I think you have this, fairly robust data set. So it's like, okay, how do you slice and dice that and look beyond more of those traditional metrics? It honestly reminds me too of just where I had some relatives that were just always had the same insurance carrier and never thought about shopping it, right? And, the classic, like, you should shop it every year. And it's like, well, I kind of like my guy or gal.
Yeah.
But it's like, okay, what else is out there? Right. Or are you really getting that best price? And oftentimes you're not. Right. So
Yeah.
those are certain things.
It's always been this way.
Yeah.
So I will leave it that way.
Yep. Creatures of habit too. Generally, we are. Love that. This is really good stuff. Let's, you talked about evolving toward a lifestyle and a identity driven brand. What does that mean operationally to you guys?
I think it goes back to, because the goal isn't just transactions, it's the financial relevance that I spoke to. So I don't think that living your mission more, it doesn't remove the need for performance. I think it changes how your performance is defined and deployed. So moving toward that brand style is having everybody on board to understand what exactly our personality is and who we are. I think that's something with every credit union that they kind of suffer with. There are brands out there that you know what it is. You just know what it is. I'm not comparing us to McDonald's or anything like that. I'm just saying when you see it, you know it. Your members should be able to do that. So should your internal members. So when you say brand lifestyle, that's what I think of. I think that as marketers, we not only need to be living the brand, we need to understand how our membership sees our brand. And if our brand were a person and walked down the street, would one of our members recognize it, and how would they acknowledge that? So I'm not sure if I fully answered that question correctly, but
yeah. Would you say that was, I mean, you've been at your current credit union for a little while now. Would you say that was a priority then, or
it still is?
Still is. It's ongoing.
It's ongoing. It's ongoing.
Totally. Yeah.
I think it should always be ongoing, top of mind. We're looking at a brand refresh, which is fun and you can throw money at it. But at the end of the day, you have to have analytics around that. What is your goal? What are we trying to accomplish with this? And a lot of times things go in they occur in the background. Frontline staff might have no idea that we're doing it. And all of a sudden, here's all these communications and this is when it's launching and this is what's happening. And we're going to be coming into your branch and redoing the walls. And they go, huh? So it's really important to have everybody on the same page. And that's why I believe it's ongoing, is because I want their input too. Sometimes it's yes, but, or no, but. However, it's so important to have all of your team involved and your membership involved in how you define what your personality is and your brand lifestyle and how you live it and lead it.
Yeah, so true. I mean, oftentimes you'll get that. I mean, not going to more digital. Hey, we need a new website. It's like,
yeah.
Well, theoretically, the website should have been evolving this entire time, right? And I think that's always the case for digital marketing in particular. It's like, oh yeah, well, the website should be building and evolving, and the case for a net new is there, but that's a huge undertaking. But sometimes you just need to do it. But without it's not a dictatorship, right? You need to solicit advice and feedback and make sure that proactive communication is disseminated. So yeah.
I mean, for university credit unions specifically, and not just the system, I think probably the biggest transformation underway for us is that historically financial institutions show up at moments of transaction. We're intentionally building relevance in the spaces between those transactions.
Mm-hmm. Yeah, kind of not the calm before the storm, if you will, like kind of a little bit of lull before any like major.
Sure.
Yeah. Mm-hmm. Which is great. Yeah. Let's transition a little bit. I've got some additional questions here. Credit unions and kind of the stewardship responsibility components. How do you balance mission with performance expectations? Because I think that's constant is like, yeah, we want to reiterate our mission. We want to keep the brand stewardship focus, but hey, we've got performance related metrics. How do you deal with, are those one and the same? Are they separate? Let's say you've got a pressure from this quarter to make particular numbers, but you don't want to loosen or reduce your reliance on your mission and values. Talk to me about that.
Yeah, no, I think I just said this because mission doesn't remove the need for performance. Yeah. I think I'd said that.
You did.
I don't even remember what I said, Tyler.
No,
you got me talking in circles there. I think honestly that it's a balancing act, which is in a way portfolio management. So I'll explain. Some marketing investments drive immediate ROI, like paid acquisition, product campaigns. Others will drive long-term institutional equity, for a lack of a better way of saying it. And that's like financial education, community partnerships. Where I think the mistake occurs is you evaluate both of them through the same lens, if that makes sense. So like short-term campaigns are measured in conversion efficiency, and purpose investments are measured in lift trust and member retention. And so we ask, how does it improve growth velocity, or how does it improve member well-being? But the strongest investments really do both. So when you align those, you get a scalable mission delivery, not just a symbolic purpose. So at the end of the day, I think credit unions, when they stop trying to outbank banks, they need to start out-meaning them. Like product parity is inevitable, but mission authenticity really is not. And I think the institutions that operationalize their purpose, not just promote it, are the ones that turn members into advocates and those transactions into lifelong memberships or relationships.
Yeah. Michael, you're a quote machine here. We got like a ton.
Don't quote me. This is all off the air.
Yeah. This is all. Yeah. Not on the air. That's hilarious. I love where you're headed there. And I also want to talk about kind of innovation and what you're seeing. I know you probably haven't heard of this acronym AI. I don't think it's probably new.
I'm gonna chat GTP that.
You heard it here first. What's as members are evolving in terms of their research paths, and obviously LLMs are becoming more and more ubiquitous, not necessarily nearly as much as we probably think as marketers, right? People are using them, but let's be honest, the behemoth that Google is still taking up the majority of the market share. How are you guys evolving to prioritize large language models and make sure that there's a presence there? And then a second part to that question is around how are you adapting kind of AI technologies and workflows within your business?
Those are both very prevalent and hard to answer questions. I mean, credit unions are clearly going through a demographic shift. We have fewer and fewer young members and fewer older members, but those are the bulk of our membership. And so we're really looking at how our digital services are adopted. So we're really digital first. We're calling ourselves a digital first credit union, and utilizing omni-channel experiences. So everything we're integrating online, mobile, self-service, in-branch touch points. We're looking at closing a couple of locations, not because we're hurting, but we're really following foot traffic. So from a digital perspective, analytical data that we talked about earlier has been key. We are watching, there's some great platforms out there. We're watching members or potential members live on the website. We're looking at journey mapping, which we just completed one project. So when it comes to a digital adoption and how we're promoting that for membership, it is ongoing. And I don't think I quite followed your question as far as how I'm answering. Does that cover, or did I miss something?
Yeah, no, I think, digital adoption, absolutely. I mean, I think it's just, there's no playbook for optimizing to large language models, but I think it is adopting, it's understanding, it's testing, and it's to a certain extent tracking prompts and things like that, but which is a lot of synthetic data. So it's directionally accurate, quote unquote. I wouldn't say even that is something, right? Yeah. But I think you're hearing, I'm sure you're hearing more and more. We're seeing that, and we're doing quite a bit with our credit union clients too, and just around educating ourselves and understanding how people are first getting the site one, and then subsequently how are they converting, right? And what
are they dropping off?
Totally. And what research have they conducted before, right? In prior to making that decision. So
exactly.
Yeah.
And when it comes to AI and, where that is and where it will be, because it will be everywhere if it's not already, we have definitely taken more of a cybersecurity approach to it as an institution. So right now, marketing has not been as involved in, well, I shouldn't say that. We have been involved in decision making, but there are certain platforms that we're completely blocked from using, and we agree with it. ChatGPT being one of them. I can't even access it on the computer. Not that I need to or want to, but marketing, we've been using it from a very administrative standpoint. So while it helps me build out, a quick communication plan, I'm immediately in there and no. So I appreciate its capability. I do really think that it can be dangerous when it comes to authenticity. There have already been so many vendors we work with that they don't want to see anything AI. If this is AI built, we are not interested, and vice versa. Sure. And so we think our membership deserves the same thing because we tout the real person being there. So again, Tyler, I'm not poo-pooing on the AI in any way, shape, or form. I do think that there needs to be eventually some legislation, and especially in finance, we start to see a lot of loans coming to us through people looking us up. And hey, I love that ChatGPT is finding us and saying, check out you. Thanks for the plug there. It also concerns me on what else our members are asking them and where else it might be taking them, and if that information is accurate. I'm not saying humans are perfect, but I do think that it's important when at the end of the day, the member's struggling, they have a person to speak to.
Yeah, exactly. Yeah. And I think that's the big thing that we're seeing across the board is just more and more companies inserting AI, thinking that the service needs it. And when actuality,
right,
wants to keep pressing 0 to get to an actual person. Right. And I think that authenticity is huge. I'm glad you've restated that. But I think you're right. You have to keep a pulse, and you have to understand it's your regulated industry. Excuse me. And there's also people that are concerned with their data getting out there, and that's in certain cases tough to regulate. Yeah.
That is wildly scary. We were going to implement a new AI platform into our chat program on our website. And luckily somebody said, well, wait a minute. This crawls everything, including unpublished pages.
Yeah.
Like it connects directly to our web vendor. We can't do that because there's sensitive information that goes through third parties. Like when you apply for a loan, you need to put in your social security number. I know it's not hard to find things like that anymore, but if we sit there and somebody ne'er-do-well goes in there and says, what's my social security number? And it starts feeding all these social security numbers. That's a break in the system. And AI doesn't know any better because you asked it. So those little things like that do scare me. And that's kind of an improbable situation, but it's not that improbable when you see data breaches pop out just on human error. If an AI is directly linked to something that's sensitive and it doesn't know what you're asking, but you know what you're asking, you could very likely cause a gigantic data breach if you're not careful. So that's another scary thing for me. Not to be doom and gloom, but
no, not at all. But I think again, it's a differentiator to a certain extent around just your prioritization around security and the health of members.
That's huge today. Security is huge.
Absolutely. And I think, the evolution of AI, and we're already starting to see it, and we're building tools out as well, but just where we can essentially have a confined space that is not like a exploratory discovery tool like ChatGPT or Claude.
Right.
Gemini, it is confined, like a notebook LM, for example, that is just, you're training it up on the data that you're adding to it, and it's not able to source outside things to a certain extent. So again,
and I love seeing more and more of that. That's my type of music right there.
Yeah, exactly. Michael, great stuff here. I really appreciate your time. Let's have a couple closing questions here.
Sure.
Let's go back to kind of the mission stuff. What advice would you give to marketing leaders navigating mission and performance at the same time. I know we talked about that a little bit. I know you talked about consistency and making sure that they're kind of essentially one and the same. Would you, anything to add there, or individuals that, for example, are so fixated on performance and it's so too much so where they're essentially avoiding or discounting the mission? I think we see that all the time, honestly, to fight for those metrics.
It's a good question. I think I can sum it up in one word: authentic. Be authentic. That's two words, but I think it's important that people revisit their mission every strategic planning session, every quarter, every month if they need to. It's not about all teams where you say, okay, for $5, what's our mission statement? Everybody should know it, and everybody should be living it and understand how they're living it. I know that's not always easy to do, but again, at the end of the day, if you're, increasing a rate on something just to make a few more bucks and it's within the Fed, it makes sense for you, but you're cutting out certain members who could use that loan, but you're not taking the risk to give them the loan that falls on the people helping people philosophy we were built on. We have to keep the lights on. We have to not be risky. But if you're not living the mission, if that goes against your mission, you need to revisit. Do you know your membership? Are you serving them the way that you were built to serve them? And if you're not, maybe the mission needs to change. But either way, I think you need to remain authentic to who you are, who you say you are. Because again, if you're not able to serve your membership in the way that you are asking every staff member to know and memorize, you're not living it. So authenticity. I like how one word turned into like 200 words there.
Yeah, it's like the short-term gains. Like, are they worth it for the long term?
Yeah.
Most likely.
And why are we doing it? Are we just balancing our portfolio? Do we want to look good on the call report? Like what are our motives here? Is what I was trying to say.
Yeah, you nailed it. Like, your executive team's happy, but are the customers happy long term?
Yeah.
Oh, yeah. Did you write something there? So I love that. Yeah,
and how many people did we lose loyalty because we made that decision?
Totally.
We could have potentially, it's ongoing, but I think authenticity is so valuable.
You can say AI here, but I'm sure there's other things perhaps too we can think about. But what's one shift happening right now that you think will define the next 5 years of financial services marketing specifically?
I think the economy has been definitely a huge piece. AI, of course, but it already has been. Sure. I can say AI already has been. The economy has been affecting credit unions since the beginning of time. So, but I have seen some significant shifts, especially in rate changes. I do think that that's going to be a challenge for certain types of marketing, but it's also an opportunity to where you can put in more storytelling, the meat in between those transactions, not lead with rates, lead with your heart type thing. This has been something I've heard from many others in the credit union system throughout my time. So this is not new or innovative. I think it's just something that we need to revisit as we see certain potentially dangerous economic changes, and also educational. How are we informing members and potential members of what these changes mean? And even tax season this year, there are a few changes that people don't quite understand that we could be ahead of and we could be on top of. So I think the economy, but that's always kind of worrying me, as it is most people. But I think in the next 5 years, that's something we want to. And I don't have specifics, so I'll just be very general. Just blame it on that word, and we can go from there.
Trust me, it's the economy's fault. No.
Yep, exactly.
Yeah. But I think you also meant just education. And I think making sure people are educated themselves and making sure that
empowered.
Empowered. Absolutely. And I think that's back to some more of that mission, that authenticity, and that stewardship that, I know you guys are really promoting actively. So, Michael, it's an absolute pleasure. Really, I'm not lying when I say there's some really good quotable moments. Really appreciate your time, and I know you got one or two things going on. So, hey, where can people interact with the University Credit Union and find you online?
Yeah, we're at ucu.org. If you want to bug me, you can find me on LinkedIn, just Michael Murdoch. I'll pop up. But yeah, I am a huge collaborator. Love cooperation. So That's the other thing I love about the difference between big box banks and credit unions. If I called up Tansley, for example, and said, "Hey, give me the secret. How did you nail this?"
Yeah.
She more than she'd probably hang up on me, but no, I'm kidding. She more than likely would say, "Oh, A to Z," or "Let me get you my CMO or VP," or they'll give you everything. I could call most any shop and they would do that. So look me up, email me. I'm happy to chat or be yelled at, whatever makes the most sense.
She actually told us the secret during our last podcast session, so you'll have to listen to that.
I will listen.
There, it's minute. No, I'm just joking. But I think that's also too. Just again, I talked about Kool-Aid. I talked about just like it truly is a community, and you guys, in a certain, you're not direct competitors within your geographic locations, but you're sharing, right? And we talked to Pam from Navy Credit Union. She said the same thing about and they're everywhere, right? So loved hearing that. And I name me another industry that's going to say that. I think there's not too many. So
I don't know. Marine biology. I don't.
Yeah, exactly. Michael, great to see you. Appreciate your time. Thanks again.
Yeah. Thank you, Tyler.
Awesome. See ya.
Talk soon.
Thanks for listening to Built to Convert. If you're serious about growth, don't just listen. Subscribe, leave a review, and follow us for new episodes that drop straight into your feed. Until next time, keep building.